But beyond her political future, such flip-flops can have an adverse impact on the British economy too. Because London is one of the key centres of global finance. And there is more trouble brewing in the offices of one of the major banks there, Credit Suisse. It is headquartered in Switzerland, but London is a major hub for the bank. Both the Bank of England and the Swiss financial regulator are now monitoring Credit Suisse. In the next few minutes, we'll tell you why. For one, investors are worried. The bank's shares are witnessing a collapse. They fell by 12% last week. Today, the stock was down by another 8%. Now, you must be wondering, that's not much. Such falls happen all the time. So what is so concerning about all this? Well, look at this statistic now. In 1 year, shares of Credit Suisse have fallen by as much as 60%. You heard that right. The price of the share has dropped by 60%. Why? Because there are growing concerns about the books of Credit Suisse. Investors are worried about a 2008-style collapse. Yes, the last major financial crisis, when American banks had failed because of bad debt. There are similar reports and claims floating around about this bank, Credit Suisse, now. Let me round up some of them. Over the weekend, the bank CEO tried to settle all doubts. His name is Ulrich Körner. He wrote a memo to his staff. Körner said that Credit Suisse faces a critical moment. But as a bank, it remains strong. That's what he says. Other executives of Credit Suisse attempted an outreach too. They spoke to investors and assured them that the bank is financially strong. But it wasn't good enough. The Credit Suisse stock still continues to tumble. So what's really happening at this bank, and why are investors worried? In recent weeks, few reports have raised some red flags. Deutsche Bank has conducted an assessment. It has raised a question mark over the financial strength of this bank. According to Deutsche Bank, Credit Suisse needs another $4.1 billion. What for? Mainly two things: the restructuring of the bank and to support growth initiatives. Now that's red flag number one, when the fundamentals of the bank have been called into question. Let's tell you about red flag number two, the losses. For 3 straight financial quarters, the bank has lost money, and that's a problem, a big problem, because the competitors of Credit Suisse are still making money. Think about that. Let's now take a look at the recent results. In July, Credit Suisse lost more than $1 billion, $1 billion. What about the other European banks? Their balance sheets were in the green. Deutsche Bank, for instance, a profit of $1.2 billion. UBS, a profit of more than $2 billion. So the bank is simply not making money. That's evident. Let's now talk about red flag number 3. Are the string of scandals, the recent scandals that have hit the bank. There's an entire list. One of the bank's employees was recently convicted of forging signatures of clients. The bank has been accused of serving human rights abusers and businessmen under sanctions. The bank recently admitted to defaulting investors too, and it was over an $850 million loan to Mozambique. What for? To pay for a tuna fishing fleet. Apparently, some part of the loan went into the very pockets of bankers and government officials as kickbacks. The bank also apparently hired private detectives to spy on its employees. All these scandals have tarnished the reputation of Credit Suisse. The bank is now undergoing a restructuring drive to revive its fortunes, and this is something that the Credit Suisse CEO also talked about in his memo. I quote, "We are in the process of reshaping Credit Suisse for a long-term, sustainable future with significant potential for value creation." But you see, there's a problem here. Credit Suisse needs investors to steady the ship. But as of last week, the bank was not able to make any major headway. In fact, reports say it was still sounding out the investors. All these problems seem to be having a compounding effect on the stock price of Credit Suisse. Investors are now betting on the bank to fail. So there is an increased demand for a credit default swap of Credit Suisse. What does this mean? What is a credit default swap? It is a financial agreement, essentially. sort of like a bet against a financial instrument. Or in this particular case, a financial institution like Credit Suisse. Let me explain further. If you buy a credit default swap, you are effectively betting against the institution. You are banking on it to fail. So that you can get a lucrative payout instead. Now remember, these credit default swaps, or CDS, played a crucial role in the financial crisis of 2008. There were many investors who realized that there is a housing bubble in America, so they bet on the market to fail. We all know what happened next. When it happened, some of the investors made money, but there were others who lost a lot of money too. Banks like AIG didn't have money to cover more than $440 billion worth of CDS. Simply because the number of defaults was so huge. So my question is, can it happen again? Will Credit Suisse be at the center of the next big financial crisis? We hope that doesn't happen. But considering the growing recession fears, the foundations of leading banks will certainly be tested. WION World is now available in your country. Download the app now and get all the news updates on the move.